Hello friends, good week, how are you? Vladimir here with you, and this is the weekly review for the last week of September 2012. Last week was very interesting. Most of the time it was boring and playing around the same range, but the last days seems like the US dollar tries, right, to come back to gather strength against the majors. From my point of view, the next period, especially as closer as we come to October, will become again a US dollar month. I do think that during somewhere, as I said, from middle to September to middle of October, some big event should happen. I don't know what it is, and I don't really know if it will happen. That's my opinion based on the chart, and I think it will somewhere in this period should be US dollar time. During Friday we got some very interesting moves, especially on the US dollar, which tried to go back to 130.50 and then retrace the whole way down to 129.80, and same with the pound dollar, which just spiked through 163 and retraced the whole way down. From my point of view, this is a very bearish sign, and we are going for a cycle. And as I said on the previous week, during this period we have to look for sell opportunities on the majors, means buy opportunities for the US dollar. And the main well, we have several interesting things to follow, so let's begin. The pound dollar, let's start with this one, as we are already there. We are on extreme, right, with the RSI coming to 80. We are on 20 candles ride, right, even more, and we have very stiff resistance around the 163. We have a trend line that never was tested after the break of the Bollinger Band, and based on the Bollinger Band ride, the pair has to go and try to close lower. Now pay attention, friend. There is a rule, a cycle rule with divergences, right? This area, let me enlarge for a second, you can see what I mean. This area, right, was the last area where divergence was created. You can see this and this. You see that? Here we got a high, a stop, and another push up, and that's what we got here, right? During the divergence, this area was created a stop, and then a breakup. I'm talking about 160.30 or something like 160 ish. From my point of view, the pair is going to make a down move all the way to this area, at least. Now there is another very interesting thing, and that's the trend line. This trend line, right, also could be tested. So I do think that right now we are on the top for a pound dollar. Yes, it could try to play around. I don't think it's going to be one way. I hope it will be. I don't think so. I think it has to play around first of all for few more days or even few more weeks, play around and then make the move. Anyway, every sell opportunity you have, from my point of view, will be a good sell. How can we determine that? That, for example, the 4-hour chart, right? On the 4-hour chart, that's the trend line we were talking about. That's what it has to go back to, something like 160.30, right? And now it has a divergence right here. If it keeps going lower, an RSI crossing down, and a small trend line, this one, see that? And the small trend line can even go through the whole area like that, treating that as a false break, right? Touching almost through all these points. A break below this area with RSI going below 50 should be the trigger for the pair to go lower. Breaking below the 160-ish, the area we were talking about, should open the doors then for lower move all the way, maybe even to 159 or even 158. So in my opinion, we are playing down. In case the pound dollar pushes higher, my suggestions are to pay attention to 165, which is very important, and of course 167, but that's far. As for now, I don't see that happens, but again, surprises already happened in the past. They could happen right here. I'm on bearish opinion, and from my point of view, every up move, if and when will be triggered and will be done, will be only to bring new sellers. And right now, right here on these areas, every up move is what is called in the market as a sucker's move, because that's not real buyers. That's the push that seems like, alright, we are going to continue, and then the market make the retrace, and the new buyers that buy on the top will lose their money. So be careful there. That's what happened also on Friday with the 163 being spike. I'm on the same opinion about the euro dollar, and I do believe that the euro dollar is going first of all to 128.30, which is a 200 moving average and a 20 moving average of the daily chart. That's the meeting point. From my point of view, the euro dollar is going to build here, maybe for maybe for few more days, a flag, and it's going to break the flag and go visit 128.30 again, maybe even lower. At this point, I would suggest to be careful, because from here it could go and push lower to 127 or so, to the trend line. And then, why I say be careful? Because on this point we will get bullish hidden divergences most likely, right? So in case it does make the move down with the bullish divergences, that would be our sign to look for buy opportunities for the euro dollar. As for now, I'm on very bearish mood, and I think we are going down. Ways to join: the first way, of course, as I showed, the flag that most likely will be created and a breakdown. Well, I think that's the best way to determine. Well, nothing special I can see on the 4-hour charts. Maybe the break below the support, but I think it's already time to be in. So that's the main two things that that's the main opportunities on the majors as I see them. Very interesting pair is also the New Zealandian dollar, which is playing around the top. It has a very stiff resistance around 0.84. It did bend to bend move and break through. Now it's playing around this area. I will not be surprised on the 4-hour chart it did create something that looks like a double top. It could be turned to be a fake and we get an up move to the 0.84 or so, but it also could be the area where a down move will start. So my suggestion is just pay attention for the candle patterns. In case we get a daily bearish candle pattern, that's the sell signal, with a 20 MA as a first target and a 200 moving average on the daily chart as the second target. In case it breaks and goes up to 0.84 and higher, will be the range that we have to pay attention to, as you can see. And in case it does break it above that, then it will be a warning sign, which we will have to look for, to reanalyze, right? If it makes the break. Now, very interesting first cross is the euro against the pound, which in my opinion is going to reach very interesting level. We have a trend line through spikes, which is around 0.79, a little bit higher. And why I say it's going to be very interesting, because, well, let me make some test for you. What is this situation that we have here? What's that? What do you think? From here to here, what's that? Take a moment to think. All right. If you said anything with divergences, that's not so correct. It is convergence, which means the bulls are here. This high is higher than this high, which is a successful sign for the bulls. But there is one problem: this bearish pressure, right? It's the opposite sign, this bearish pressure. That's why I still think we are now on a bearish mood, and we could push to 0.79 or 79.20 or so until we build a bullish hidden divergence on the daily chart. Once the bullish divergence on the daily chart is created, then I do suggest to go for the 4-hour chart and pay attention for this bullish divergence that begins to be created. So I would be even more conservative from one way, and I would pay attention to the whole levels, starting from here around 0.7960, going the whole way to 0.79 or even a few pips lower. And in this range I would follow the 4-hour chart for buy opportunities with a bullish candle patterns on each of the levels whenever the stop happens, and then aiming the buy with the first target on this line with the spikes, and a second target, and a final target. I would go the whole way to 0.72 plus, which means here, right? And that would be my secret number 3 resistance, this range somewhere here. If the pair makes the this up move, then we can talk about long sell. But as for now, let's first of all find our buy opportunities from this bottom. Now I do want to take a look, not the dollar yen, OZ Kiwi, that's the one, right? Also very interesting pair. I've been talking about this pair also in the previous weekly review. I'm on the buy mood here. We have bend to bend move. Now we can go for duplication, which is around 123, 122. As for now, a little bit doubtful. I think the pair first of all will play around and try to push back to 126.60, 127 or even higher, right? And based on the divergence we have, the Bailey pressure we have here, I suggest to pay attention for this support, right? And once we get the okay to go with a candle pattern, right here, once we get the okay to go with a bullish candle pattern, we have to try to take this up move, this pair for a buy. And 20 mm of the daily chart will be the first target. The trend line, that these two tops area, will be the final target for this pair. Right after that, it could push lower a whole way to 122. As for now, I'm on a bullish opinion for this pair, and I think it will retrace from one of the closest support, starting here and going the whole way to 124 or so. The retrace will begin, and we will get some very nice pairs with this pair. Some pips, sorry, with this pair. Few words about the gold and the silver. I'm on the same opinion as I used to be on previous weekly review. Yes, it could play around. It could play around here, but with the current divergence we have and RSI extreme we have, and its top and 20 candles ride, I think every push up, as I said on the pound, will be just an up move for suckers. For those who missed the train on the first attempt, will try to join the train once it comes to the end, and it will be a mistake. For long run, I do think that gold and silver could push much higher, but for the short run, talking for several days to few weeks, I'm on very bearish mode, and every up move should be the trigger down. And I do think that the gold first of all will go back to 1700, 1710 maybe. That's the same level from my point of view. Why? Because that was the first area where the divergence created, and that's based on the divergence's rules. That's what should happen. So it's going to play around and make the down move. Also, it could be a very interesting meeting here. You see that? If it does not happen immediately and plays around and makes a down move, then that could be a great meeting of the trend line and the support. So keep in mind that it's not a time to buy for a short run. If you do want for a very long run, go and do that. But don't be surprised by the cycles that will come. And as I don't say the cycle has to come right now, because it could push higher, first of all, to 1800 or even higher. It could happen easily, right? But with the current extreme we already have and a weekly Bollinger Band duplication almost, it's a cycle area and a down move will happen. Same with silver, which is building a top with triple divergence. RSI divergence will make the down move. Also more than 20 candles right. So the down move and the correction down is guaranteed. I do suggest to pay attention for Nasdaq and of course, well, everything. S&P, Dow, Nasdaq, whatever you want. As I think we are reaching a top. I said it not once. I'm still on the same opinion. I still wait for a strong, correct weekly candle pattern on the indices. I think it's overrated without any reason, and I don't know what, I don't know when. I just think that something bad is going to trigger the indices, well, to correct very, very, very hard, very strong. So I know, again, maybe it sounds too pessimistic, but I think that's just the reality. And if you treat to the last words during the weekend, there should be a decision about Greece, about the next money they have to get. Obama asked not to do that, to delay the decision after the elections. What do they know that we don't? One thing is clear: Obama does not want nothing that could bring a worldwide crisis. He does not want to take this risk, right? And that's why he asked, don't do that. Don't get any decision about Greece or anything like that before the elections. And if we're talking about the elections, remember the oil? As I said, the oil will push down. As closer we come to elections, the lower we go. Now, daily Bollinger Band has been broken, and that's why I think the oil is building right now. Also pay attention for that. You see that? That's the line that is being tested right now. I think the oil is building a top, building a bearish hidden divergence somewhere around here. Building a bearish hidden divergence, right? As you can see, RSI just a stochastic, well, kind of double top. Maybe it could push higher. Somewhere around this area, it's going to complete this divergence and push the whole way lower again. Look for the sell opportunities for the oil and pay attention for number 1, number 2, I would say number 3. Pay attention for 96.50 as the final area. That's the maximum it could rise up to. From there, it has to continue lower, and I will not be surprised if the oil will push all the way to 88 again. I'm on very, very bearish opinion here as well. That will be all, friends. That's the opportunities I find, and I think we have to go for this week. Thank you very much for watching this video. Trade carefully, but trade, because these are the days we all were waiting for. Thank you for your time watching this video. I wish you a wonderful, profitable week and good trading. Yours, Vladimir.